Welcome to HouseLux Estate, your go-to platform for everything related to real estate and financial investments. At HouseLux Estate, our mission is to empower you with the knowledge and tools you need to navigate the intricate world of investing. We're here to demystify complex financial concepts, making them accessible and understandable. Whether you're a seasoned investor or just starting out, we cover a broad range of topics, from real estate investments to dividend growth stocks and beyond. Why? Because we believe in the power of informed decision-making. The more you know, the better your decisions, and the greater your potential for financial growth. Today, we're turning our attention to an exciting part of the financial landscape: dividend growth stocks. These are the stocks that not only promise returns, but also offer the potential for long-term income. So, let's delve into the world of dividend growth stocks and how they can provide a long-term income. Before investing, one must first understand what dividend growth stocks are. So, let's dive right in. Dividend growth stocks represent companies that not only pay dividends to their shareholders, but also increase the amount of these dividends on a consistent basis. These are typically well-established, profitable businesses that have a track record of sharing their success with investors. Now, why are dividend growth stocks so attractive? Firstly, they offer a dual advantage. Not only do you get to enjoy the capital appreciation as the stock's price grows over time, but you also receive a steady stream of income from the dividends. This is particularly appealing to those who are looking for a passive income source or planning for their retirement. Secondly, the consistent increase in dividends is a strong signal of a company's financial health and confidence in its future growth. Companies that can afford to regularly increase dividends are likely to be robust and stable. This makes them less volatile and hence safer investments. Lastly, dividend growth stocks can help combat inflation. With the cost of living consistently on the rise, a fixed income may not suffice. However, if the dividends you receive are growing every year, they can help maintain your purchasing power. But it's important to remember that not all dividend-paying stocks are created equal. Just because a company pays high dividends doesn't necessarily mean it's a good investment. It's crucial to look at the company's dividend growth rate, its ability to sustain that growth, and the overall stability of the business. Now, you might ask, why should I wait for dividends to grow when I can invest in high-yield stocks right away? Well, high dividend yields might be enticing, but they can also be a sign of a company in distress. On the other hand, a steadily increasing dividend is a positive sign of a company's long-term stability and growth potential. Now that we have a basic understanding of dividend growth stocks, let's move on to how to invest in them. Let's dive right into the step-by-step guide to investing in dividend growth stocks. It's a process you can simplify into 4 key steps: researching and selecting the right stocks, diversifying your portfolio, reinvesting dividends, and holding on to these stocks for an extended period. Step 1 is all about research and selection. It's crucial to invest in companies that have a track record of consistently increasing their dividends. This shows that the company is financially stable, profitable, and committed to sharing its success with its shareholders. Look for companies with a low payout ratio, which is the percentage of earnings paid out as dividends. A lower ratio suggests the company has room to grow its dividends in the future. You also want to invest in companies with strong competitive advantages, or moats. These could be strong brand names, a large market share, or unique technology. Companies with wide moats are more likely to fend off competition and continue growing their dividends. The second step is diversification. Don't put all your eggs in one basket. Spread your investments across different sectors and industries. This way, if one sector experiences a downturn, your entire portfolio won't be impacted. Diversification can help smooth out the bumps in the road and lead to a more stable income stream. Step 3 is about reinvesting dividends. When a company pays you a dividend, you can use that money to buy more shares of the company. This is known as dividend reinvestment. It's a powerful strategy that can significantly boost your returns over time thanks to the magic of compounding. Think of it as a snowball effect. The more dividends you reinvest, the more shares you own, and the more shares you own, the more dividends you receive. Over time, this can lead to exponential growth in your investment. The fourth and final step is to hold onto your dividend growth stocks for a long time. Dividend growth investing is a long-term strategy. It's not about making a quick buck. It's about building a steady, reliable income stream that can support you in the future. Patience is key here. It takes time for the power of compounding to work its magic. So, hold on to your stocks, reinvest your dividends, and let time do the heavy lifting. And there you have it. 4 simple steps to investing in dividend growth stocks. Start by researching and selecting the right companies with strong track records and competitive advantages. Diversify your portfolio across different sectors. Reinvest your dividends to buy more shares, and hold on to your stocks for the long haul. Investing in dividend growth stocks doesn't have to be complicated. With the right approach, it can be a straightforward and rewarding way to build wealth over time. Remember, the goal here is not to get rich quick. It's to build a steady, growing income stream that can support you in the future. By following these steps, you can start your journey in dividend growth stock investing. Investing in dividend growth stocks is not just about buying and holding. It's a strategic process, requiring careful planning and diligent execution. Let's walk through some key points to keep in mind. Firstly, doing your due diligence is non-negotiable. This means researching and understanding the company you're considering investing in. Look at its financial health, its dividend payout history, and its potential for future growth. It's not enough to pick a stock simply because it's a big name or because it's been doing well recently. You need to understand the fundamentals of the company and be confident in its long-term prospects. Secondly, be aware of the risk involved. Investing in stocks always carries a degree of risk, and dividend growth stocks are no exception. Even the most solid company can face unexpected challenges that could impact its performance. It's crucial to diversify your portfolio to mitigate this risk and not put all your eggs in one basket. Thirdly, patience is paramount. Dividend growth investing is a long-term strategy. It's about building an income stream that can sustain you over the years, not about making a quick buck. This means you need to be prepared to hold on to your stocks for a significant period of time and not panic when the market takes a dip. And finally, understand the impact of market volatility. Stock markets fluctuate. It's their nature. Prices will go up and down, and there may be periods of significant volatility. Don't let this scare you off. Instead, see it as an opportunity. When prices dip, it could be a great chance to buy more of a stock you believe in at a lower price. Remember, the goal is to build a long-term income stream, and patience is key. Investing in dividend growth stocks is not a sprint. It's a marathon. It requires time, diligence, and a solid understanding of the market. But with the right approach, it can provide a steady and growing income for years to come. Investing in dividend growth stocks is a journey that requires knowledge, patience, and strategic planning. We've taken you through the basics of understanding these stocks and provided a step-by-step guide to making your first investment. Remember, the key is to focus on companies with a strong history of dividend growth and a robust business model. By doing so, you're setting yourself up for a steady stream of income in the long run. Investing in dividend growth stocks can truly be a game changer. It's not just about the immediate returns, but the compounding effect over time that can build your wealth significantly. It's about creating a sustainable income stream that can weather economic ups and downs. So, take the plunge. Start your journey towards financial independence with dividend growth stocks. If you found this video helpful, don't forget to subscribe to House Lux Estate for more investment tips and insights. Until next time, happy investing.